Barry, how important is calling the market bottom?
It helps if you're a timer. I would not be as alarmed if I were a longer-term investor. I think the fourth quarter will end up going up higher. We always said the middle quarters would be tough. You know, as we went into this year, we called for a double-digit correction, and we got one. Then we played off March 14 lows, that cross rally, the one that went back up. But I have been surprised by the market's epiphany in April at things being serious. It has been stronger than I expected. It reminds me of John McEnroe, the tennis player, when he would shout at the referee, "You can't be serious." The market just didn't seem to realize how serious the Fed and how serious the war was until the month of April. And we know what to watch at this point. We have three key variables we're watching and three more that are not as widely known, but we are watching them. And that'll tell us when the bottom is in.
All right, let's talk through some of those variables from the obvious to the less so.
Well, obviously, you've got to focus on yields. We think the 10-year yield and the real yield are in this topping out, if not already topped phase. So that affects your price-earnings ratios. The other one is oil and the war. They're mutually self-reinforcing, and oil is a product of a combination of lack of spending on new development and the war. The other one is Fed funds futures. I think they're never going to get to 3%.
Really?
I do not think they can. No, not at all. In fact, world interest rate probabilities are at about 2.5. But I think they'll stop somewhere in the low twos, take a pause, and that would trigger a rally. As far as less obvious things that go, Bitcoin is a high-powered speculative instrument. We could not understand why it was holding on into the 30,000s when the financial conditions were tightening and global money supply measured in dollars was falling rapidly on the strong dollar and weak overseas growth. And that's going to give it up. I think the Bitcoin could fall another $10,000 or $15,000. And that would mark your low. And the other one is high-yield option-adjusted spreads. I mean, if you look at a typical slowdown, particularly in the PMI manufacturing index, which is the third thing we're watching, as they slow down, the high-yield spreads widen. And when they widen to perhaps up to 6%, you'll probably put in a bottom for the market as well, equities. I mentioned the PMI. That's very weak right now. The PMI is because it's going to be very weak. The reason that's going to weaken is because Europe and China are going to drag us down. They're really self-inflicting quite a bit of wounds to themselves, and it's dragging down the cyclical economy.